you're thinking about buying a home this spring or summer in Oregon, you're going to want to hear this update. The market continues to get weirder, and if you're just following the headlines, you're going to be in for a surprise. We're in a hot pocket market. Yes, hot pocket, like the thing that you put in the microwave. In this quick update, I'm going to explain. All that starts now. If you've watched our channel before, Living in Oregon, you know that we cover quite a bit of data on this channel, but data doesn't always tell the whole story, especially when it comes to news articles, which there's no shortage of on the real estate topic. There's an article that came out from the Wall Street Journal just this past week. The headline says that the housing market momentum stalls as critical spring season approaches. And there's a lot of other articles just like that. In that article, they mentioned too, mortgage demand for home buyers drops to a 28-year low. So if you're seeing some of these articles over the past week, still some articles out there about crashes, seen a lot of things like this. Just look at this date here, March 7th, 2023. This is just from this past week. It says down here, however, concerns about housing market crash have started to surface, with some experts sounding the alarm that the U.S. housing market may be on the verge of crash. We've been seeing articles like this for at least about a year or so, but we've seen quite a few so far in 2023. And if you're like a lot of people, just a headline reader, you're probably thinking going into the market that you're going to be able to get a home significantly below asking price. You're probably not going to be competing with other buyers out there, which in some cases actually is going to be true. In a lot of cases, it's not going to be true. And by the way, welcome back to the channel Living in Oregon, or if you're new to this channel, Living in Oregon. My name's Seth Marchant. I'm a licensed broker in the state of Oregon. We help people that are relocating to Oregon all the time. You can call us, text us, email us, click the link below in the description if you want to schedule a Zoom call with us. And if you want to see more videos like this, make sure and hit the subscribe button. So what's the hot pocket reference? I can't take credit for this. Somebody else came up with this, but if you've ever put a hot pocket in the microwave and taken it out too early, what happens? Some parts of it are really hot, some are still really cold, and that's really what we're seeing in the real estate market right now. Some places are still really hot, and these places aren't necessarily far away from each other. A neighborhood over is really cold, so it's definitely going to be dependent. A lot of these articles are covering data that's national in scope. It's not localized. You know, real estate is a very localized market. What's happening in one state or the rest of the country isn't necessarily going to affect the rest of the market. So let's take a look. What are some of the hot homes? What are the homes that are going really quickly, going under contract right away? And as realtors, what we're seeing is we're still seeing some of these homes getting multiple offers. The closer you get to the average, the more likely you're going to compete with other buyers. So homes in between that 300 and 600 range, mostly 400 to 500 range. These types of homes are going under contract very quickly. So we're talking about like 2, 3, 4, 5 days, and oftentimes are seeing multiple offers. Our buyers out there are still encountering around these price points multiple offers. Not to say that you can't find multiple offers at other price points as well, but there's a much higher concentration around this average price point right now. So if you're just stepping into the real estate market and you've just been reading headlines, probably not expecting to face too much competition, but as realtors, anecdotally, what are we actually seeing on the ground? We are still seeing quite a bit of buyer competition. Now, as far as numbers, what does that look like? Let's take a look at the top 5 sold over list price for over 1.5 million as well as below 1.5 million. Let's just look at the below 1.5 million up here. You can see even below 1.5 million, these are well above the average price ranges that we just took a look at. So don't expect to be paying 5%, 10%, 15% above list if you find yourself in a competitive situation with other buyers. We're talking more like 2, 3, 4, 5% above list. Nothing like we saw in the past few years. And this next graph right here will give you a little bit better idea of the market as a whole, not just that average price point. So if you got a home that's maybe not super competitive, what do you expect? What do you expect to pay above or below list as it stands right now? Last month, about 1% below list price. We'll expect that to tick up into the spring like it normally does, but you never know what's going to happen. We definitely didn't expect inventory to be where it is right now, and that's some of the reason why buyers are still having to be competitive, is because inventory is a lot lower than we anticipated. If you watched our video last month, it was really starting to build up from the last quarter of 2022, Q4. So in January, what this number is 2.7. That represents months. That's how inventory is measured. it would take 2.7 months to sell all of the current inventory from January if there was no more inventory gained. And what we saw over the last few months is that not a whole lot of new listings came to the market, so inventory actually went down considerably. If you look at recent years, inventory typically starts to tick up into the spring and summertime, and if it doesn't, it might stay flat, might go down a little bit, but usually don't see it go down by well over a full month. So we're not seeing a whole lot of new listings, and if you've been following along with Zillow or Redfin or Realtor.com or whatever you use to search homes online, you've probably noticed that yourself as well. Not a whole lot of new listings popping up every week. They typically show up around Thursday or Friday, just in time for people to tour them on the weekends. Here's the numbers from the past few years. You can see wintertime coming into springtime inventory ticking up. Right now, we're ticking down. And there's really not a whole lot of reason to believe that we're going to see a whole lot more inventory come to the market anytime in the near future. A lot of people speculating that because so many owners now have really low interest rates, close to the 2s, around the 3s, to have to sell and move somewhere and pay at least twice that in interest rate is not appealing right now to sellers. So a lot of the consensus is a lot of sellers are sitting right now because their rates are so low compared to what's available on the market. Here's what trends look like for the past month compared to January, and then the past month compared to that same month in the year before. You can see February to January of this year, new listings down, but even more so February of 2023 versus 2022, new listings way down. You can see total market time way up right now. And that's because we have a lot of inventory that's been sitting there from Q4 of 2022, still kind of feeling the effects of some sticky, stubborn sellers that don't want to adjust the price of their home to meet the market demand. You know, coming off of this red hot sellers market when everybody's trying to get as much for their home and getting record numbers for their homes, it's hard for some sellers to stomach that we're now past that point and they're going to have to take less for their home than they probably thought that they were going to get. So what we're seeing out there right now is inventory is higher than it's been, not a whole lot of new inventory, so not necessarily inventory that buyers are looking for or that's at a price point that buyers are looking for. And there's still a lot of buyers out there, still a lot of people that have to buy homes, still cash buyers out there that are unaffected by the interest rates. So without those new listings, even though inventory is a little bit higher, we are still seeing a pretty competitive market. All right, so where are we at with rates? We got over 7% at one point here recently towards the end of last year. Started to come back down and then back up again. But there's reason to believe that rates might start to go back down again. And the reason being, if you haven't heard, or perhaps you have at least heard, maybe you watched the news and you're not familiar with what happened, it's kind of complicated. I'll try and articulate it as best I can. But Silicon Valley Bank, there was a major bank in Silicon Valley in the Bay Area, San Francisco, this past week that basically failed. And a lot of people point to the rapid rising rates of the Fed causing some banks that have bought long-term bonds to lose money. And in Silicon Valley Bank's case, they were buying 10-year bonds with rates going up. Those bonds became less valuable. I guess they needed more liquid than they had, so they had to sell those bonds for a loss. Word got out, the stock went down. And this bank is probably a little bit unique in that Silicon Valley Bank, a lot of their deposits are from venture capitalists that are backing companies that oftentimes aren't making any sort of profit, that have a lot of expenses, mostly payroll. So Silicon Valley was taking in a lot of big deposits up front, especially over the past couple years where we were really in this bull market. Even through COVID with stock market soaring, a lot of venture capitalists were pouring money into all sorts of different startups. A lot of this money was going into Silicon Valley Bank. I've heard numbers up to like 50% of startups had their money in Silicon Valley Bank. So you have a bank where there's a lot of money coming in initially from the venture capitalists. There's no consistent flow because these are startups that aren't producing capital, but these startups still need access to their liquid to pay for things like payroll. So investing in 10-year bonds might not have been the best idea for Silicon Valley Bank. Some were critical of that. But what had happened is a lot of these founders all talk to each other, group texts on Facebook, on Slack. They'll have Slack channels where there'll be like dozens of founders or hundreds of founders in the Slack channel. And on Thursday morning last week, they started talking about what was happening with Silicon Valley Bank. Everybody got worried and people went to go start withdrawing their money. It's called A Run on the Bank. If you ever watched that movie, It's a Wonderful Life. Can't say I've seen the whole thing, but I have seen the scene at the bank where the guy's asking people, how much money do you need? We don't have enough money to give to everybody. Just take what you need. That's a run on the bank where everybody that has deposited their money, all the clients go to the bank and say, hey, we want our money back. The bank doesn't have enough money to give to everybody. And if you don't know, deposits up to $250,000 are only insured. So nothing past $250,000. Now, that might sound like a lot of money, but for a big company, that has payroll that's in the millions of dollars, that can obviously be problematic. So a lot of these companies that were using Silicon Valley Bank, we're not going to have access to their funds, weren't going to be able to make payroll. And a lot of people attribute this to the Fed raising rates so quickly, so fast. The Fed's been in a tough spot over the past few years. I've seen this meme going around quite a bit. It seems like there is really no good option. Hindsight's always 20/20. A lot of people say that the Fed should have started raising rates sooner and slower rather than later and so rapidly. But either way, it sounds like rates are at least going to stop, perhaps even go down. Now, if that happens, things are going to get really interesting. There's a lot of buyers, as you probably know, that are sitting on the sideline right now waiting for rates to come back down. We have a lot of buyers that tell us, hey, rates are a little bit too high for my budget right now. I'm going to wait. I'm going to hold out. So what's going to happen if rates do go back down and inventory is already low and we're still already seeing competing offers? I think the best that we could hope for is that some of those sellers that I mentioned that have the low interest rates will go low enough to compel them to be able to list their home and sell and move somewhere else. Aside from that, again, there aren't many indicators as to why we might have more inventory coming anytime in the near future. And this paragraph right here is just a paragraph from this article in USA Today. Top economists say collapse of SVB and broader risk of the financial system will lead the Fed to raise interest rates by no more than 0.25% next week. Some experts expect the central bank to pause. So that's where we're at. These are some of the headlines that I just Google searched this morning. A lot different than some of the stuff that we've been seeing this past week and in the past year. See articles like this: housing market could see relief. Again, I don't know if that's going to be relief. You're gonna have a lot of buyers maybe finding out the hard way that they're going to be competing with a lot of other buyers. So rates might go back down, but you might be paying a higher purchase price. So the market right now is pretty weird. It's been really weird the past couple years, but it seems to get weirder. But that's where we come in. As licensed brokers in the state of Oregon, we are here to help you. You can call us, text us, email us, click the link below in the description of this video to find all of our contact information, including a link to our calendar if you want to schedule a call with us. And if you've got this far in the video, give us a thumbs up, lets us know we're doing a good job, and make sure and subscribe so you'll see more videos like this. It helps our channel too. Feel free to leave us a comment. Let us know how we're doing. Let us know if you have any questions. And I'll just leave you with this right here. This is just a snapshot of the average sale prices in the Portland metro area, including a little bit of Clark County, the Vancouver area, just across the river, for this past month. Seeing this visual sometimes helps people that are outside of the area that aren't really familiar with the area and how things are broken down and kind of where the differences in prices are. Until next time, take care, everyone.